A company processes thousands of transactions every day. Everything is automated. None of the indicators are in the red. And yet, for 3 months, the payroll figures were incorrect, and no one noticed. Not because of fraud, not because of human error. In this video, you'll learn why a system can seem perfectly controlled, yet still produce incorrect results. And above all, why is this question so crucial in auditing? Does the system actually process the data correctly? Because at the end of the day, trust is not proof. In practical terms, what is an application control? It is an automated mechanism built directly into the system that acts as a safeguard for the data. Their role is simple: to ensure that all data entering, passing through, or leaving the system is complete, accurate, and valid. They influence how operations are triggered, recorded, processed, and communicated. For example, an application can prevent a duplicate invoice from being entered, or automatically calculate taxes based on a pre-configured rate. Quickly, an important distinction must be made. General IT controls, or ITGCs, are the pillars that provide a framework for the environment, such as access management, program changes, and operations. They are the foundation. In contrast, processing controls, or ITAC, are specific to the application systems themselves. Think of ITCGs as the fences, cameras, and locks surrounding a bank. And application controls, that's the logic inside the vault, the one that counts the money. You can have the best locks in the world, but if the machine that counts the bills makes mistakes, your numbers will be wrong. And that's exactly where processing controls come into play. When you dig deeper, you realize that these checks are everywhere, in calculations, in reports, and in data exchanges between systems via interfaces. Everything that transforms data. And that's exactly where the risk gets interesting, because these processes are invisible. He then looks at some concrete examples. An automated payroll calculation that's been wrong for 3 months. A data validation check designed to flag an error that lets everything slip through. An exceptional report based on incomplete data. Transactions that disappear into the accounting system's interface. Improperly configured management rules applied across the entire system. But something stands out. The audit is there, visible, documented, but the result is wrong, and no one knows it. The consequences are immediate. Duplicate transactions, calculation errors, management reports based on incomplete information, and above all, a problem that remains hidden until the day it becomes critical. At this stage, the auditor's role is changing. It is no longer limited to verifying whether a control exists. Instead, the auditor seeks to understand how it actually works. In other words, it analyzes the logic of the check, the data used, normal scenarios, as well as error scenarios. Why? Because an automated check is only reliable if it is well designed, properly configured, and truly effective in practice. Information technology application controls can be broken down into 3 key stages. At input, we ensure the data is accurate from the moment it is entered. During processing, the system applies programming and configuration rules to process the data correctly. At output, we verify that the results are reliable. But in practice, the same types of checks are often performed at each of these 3 stages. Here are a few examples. Validation checks, which ensure compliance with data rules, authorization checks, which govern user permissions, and reconciliation or matching checks, which compare information against one another. You'll find more examples in the description. The key takeaway: these checks are similar, but they occur at different stages of the process. The age of AI is already here. It approves loans, detects fraud, and influences critical decisions. But let's not forget one essential thing. AI is merely a reflection of the data it is fed. If the data is flawed, or if the processing is flawed, the decisions will be flawed as well. It's the well-known principle: garbage in, garbage out. In the end, one thing becomes clear. General controls aren't enough. What really matters too is monitoring what the application does with the data. Because ultimately, the controls over data processing are invisible, but they are what guarantee the reliability of the results. If this video helped you better understand internal control, subscribe for more.